Hello, in this presentation we are going to talk about Amazon Company. We are Santiago Rojas, Ana Paula Vargas, Valentina Rubio, y Karol Diaz. This is the table of content, and we are going to start talking about Amazon. Amazon is an American e-commerce, cloud computer, digital streaming, and artificial intelligence corporation at all levels that offers its customer a variety of products, simple registration, purchase, payment processes, data security, free or low-cost shipping, a subscription program, and fast delivery.
Hello and welcome to Vertical Analysis. Vertical analysis is important because it allows us to know the proportion or weight of one particular account within the total one. So, for example, we can see the weight or percentage of inventories within or related with the total assets of the company. So, in this particular case, we have that property and equipment has almost 40% of all the assets. It means that this company invests a lot, like in giving a good services and on the machines and whatever. On the other hand, we have a goodwill with a really low percentage compared with the other ones, but it's still good taking into account that goodwill are related with donations. So a 4 percentage is a very alright. Now, in vertical analysis of the liabilities, we can analyze the current and non-current ones. So, in this case, we observe that the total current liabilities has a weight of approximately 50% of the total ones, and we think that's so and quite equilibrated, because it will be 50 and 50 approximately. But that might be kind of bad for the company because the debts that you have to pay in a lot of years are equal to the debts you have to pay in short term. So that might be suffocating for the company. That is the first point. And the second is that liabilities currently all the liabilities has a really elevated weight related to the assets. But that's something that we are gonna explain below in the financial structure.
Okay, hello, my name is Santiago, and I'm going to present the part of the horizontal analysis. And in this part of horizontal analysis of Amazon, we will compare the periods of December 31st of 2021 and December 31st of 2022. So first of all, this analysis will allow us to compare the variations that the financial statement has had and will allow us to make an evaluation of the company's performance. And everything is going to conclude if the company's behavior was good, regular, or bad during this period. Being so, the analysis will start from the assets of the company, where first we can see that in the part of marketable securities, there was a decrease of almost 50%. And these marketable securities allow the company to have liquidity and have returns on this investment with static funds. However, here also manage the risk and possibly Amazon decrease its purchase, possibly because it could have a good return otherwise or in organizational investment. And also we could say that the decrease in the assets is due to accounts payable or some investment. Also, by decreasing the current assets, there is a greater profitability because non-current assets are more profitable than the current assets. However, it's important to analyze the positive variation because we need to analyze the positive variation, and this variation analyze showed us, for example, that the goodwill that had the biggest variation of growth with more than 30%, refers to an intangible value that values the company. And in this case, we can see that Amazon has been valued with respect to 2021. This means that these intangible assets generate benefits to Amazon and ranking from the brand, customers, and prestige. So we can say that Amazon year by year increased its value. Finally, to analyze, it's important to know that this little variation, for example, in the part of the cash and the cash equivalent, does not exceed the 1%, as in the case of operating leases. And in additional to the little variations, that there is a general of the assets that only reach the minus 2%. Okay, so now we are going to analyze the liabilities with the horizontal analysis of Amazon. So, first of all, on the liability side, we can start with the decrease in the accounts payable debt, in which Amazon balanced these accounts, decreasing the debt in the factor by 12%. Also, there was a slight increase in accounts receivable, and even if it's only 8%, it's advisable to collect to have more cash flow. Considering this, we can say that the total current liabilities decrease, which mean that Amazon is fulfilling its obligations to pay. Likewise, the long-term liabilities and long-term debts also decrease, and although their percentage variation is very low, this still means that Amazon is dealing with its obligation to pay.
Hello, I'm Valentina, and now we're going to talk about the financial structure. So, first of all, we have the financial equation that you can appreciate on the slide, and is assets equal to equity plus liabilities. And then we have the total assets of the company in 2022 that were approximately 410,767, and that's the initial percentage of 100%. So now, for knowing the proportion between equity and liabilities, what we did was that we took the number inside the red circle and we divided between the assets for knowing the proportion of, let's say, equity inside the assets. Although for liabilities, it was a little bit different because the number that we have was total liabilities and equity together. So what we did was a subtraction, and with that number, we did the same process as before. So the weighting of equity is approximately 30% and of liabilities 70%. So now, is our financial structure good or bad? Well, for responding to that question, we have to first analyze the context in which, once again, the Federal Reserve is increasing the interest rates in the United States. In Amazon, our company has a weight of approximately 70% of all the assets in liabilities. It means that they are acquiring a lot of goods through credit and having short and long term debts that might represent a really high cost of opportunity. That's because all the money that they have to pay on interest rates, and just like the cost of credit is really high, and that money could have been invested on projects that actually improve the sales and improve like the brand image. We know well that the money invested on liabilities are like work capital, but the interest rate is just too high, and we're, I say, losing a lot of money on that instead of investing on projects that equity might build with only 30%. So we don't say it's really good or bad, but a better weighting and proportion and might result in a better performance of our company.
So, talking about financial indicators, We can start with growth rate. Amazon revenue for the quarter ending March 31st of 2023 was about 127,358 billion, a 9.37% increase year over year. So Amazon's sales growth rate, according to the company, the sales growth rate includes North American, worldwide, and Amazon Web Services sales. Amazon Web Services, the company's internet cloud infrastructure, is an increasingly important business for Amazon. Developers and businesses can run their operations online on Amazon Web Services for a monthly fee. AWS, as it is commonly known, is Amazon's fastest growing source of revenue, accounting for 37% of the sales in 2021. The company continues to make many capital investments each year, primarily using cash flow from operations. This leaves little cash for anything else, meaning all eyes are on growth, in addition to being at the forefront of retail e-commerce. And now we are going to talk about valuation. And according to the chart, you can see that Amazon stock has a price of $112.18. And taking into account the chart, you can see that it is on the rise. Next, we can see the profitability. Amazon gross profit for the quarter ending of March 21st of 2023 was 59,567 billion, a 19.27% increase year over year. And Amazon gross profit for the 12 months ending March 21st of 2023 was 234,774 billion, a 16.62% increase year over year. Talking about liquidity, we have current ratio, quick ratio, and cash ratio. So talking about current ratio is a liquidity ratio calculated as current assets divided by current liabilities. The quick ratio, we have a liquidity ratio calculated as cash plus short-term marketable investment plus receivables divided by the current liabilities. And the cash ratio, we have the liquidity ratio calculated as cash plus short-term marketable investments divided by current liabilities. So taking into account the chart, we can see that Amazon improved all these ratios from 2020 to 2021, but then they start all deteriorating from 2021 to 2022. Now, talking about economic situation, we have three important aspects. First, we have inflation, then recession, and interest rates. So, talking about inflation, Amazon's product prices increases by 6% in 2022, which is below the average inflation range of 7% to 9% in the US this year. Amazon expects its product prices to grow below 3% in 2023 and then turn negative in 2024. These growth rates show Amazon may be responding to record inflation rates by mitigating its impact on customers. Talking about recession, no Amazon business is 100% recession proof. There are just too many factors that will impact the overall health and financial stability of it during a recession. For example, we have the inflation across the board, increasing costs, lack of consumer confidence, and other aspects. And talking about interest rates, what changes for Amazon investors from a fundamental perspective? Any bump in interest rates is bad news for Amazon. Higher rates usually translate into less consumption, which directly impacts on the company's e-commerce segments, and also the higher cost of capital through both debt and equity, which Amazon is living.
One of the aspects that make Amazon the brand that it is today is its focus on customer loyalty. Instead of prioritizing the competitor focus, they aim towards gaining the customer's fidelity to the brand. Also, Amazon is a brand that is driven through commitment and operational excellence, making sure that the services they provide are delivered effectively and taking into consideration the customer needs at all times. In addition, it is important to mention the decline on the market that severely affected Amazon on 2022. It reduced drastically its share price around 40%. However, it is expected that the e commerce sector will bounce back to business, making Amazon a great option when it comes to investing, given the fact that it is already well positioned on the market. Another important aspect of Amazon is its most valuable asset, their web services. This can be seen as an example of having diverse revenue streams. Amazon Web Service gained them an increase of 28.7% in their revenue on 2022 and contributed to the company's overall income. An additional aspect that is important for Amazon would be its prioritization of their long term investments. The company's growth over the years remains impressive despite of all the setbacks that they may have had in the process, making it one of the best stocks in the long term. Regarding the financial management adjustments, there are a few strategies that, if the company implements, would make it possible to reduce a little bit of the cost of the company and focusing on increasing the revenue and reallocating the resources that will result in the company's growth. Besides reducing the amount of employees that may be not completely necessary for the company, one of the useless costs for the company is their warehouse space. Currently, Amazon only is using the 65% of their warehouse capacity. So there is a great opportunity for the company to let go of the excess space or putting that to a better use. Another strategy that could work for Amazon is redesigning or updating their packages to reduce loss of materials and also to make sure that all of the delivery services are doing the most to assure there will be an optimization of the truck space for deliveries, reducing the amount of trips that these trucks will have to make to deliver an amount of products.
And thank you for watching.